This is a weekly Breaking Forex news update from Horse Forex. For more information, visit our website, www.horsegroup.net. FTSE 100 drops on China tensions. GBP USD breakdown. U.S. market open. Much of the early week optimism has come to a halt, with equity markets looking to close out the back end of the week in the red. U.S.-China tensions remain in focus, particularly after China announced that it will look to place national security legislation on Hong Kong. In turn, the Hang Seng had been the notable underperformer overnight, closing lower by 5.5%, marking its worst drop since 2008, amid fears of a return to HK protests. The risk-off sentiment has spread to European markets, with the Euro stocks 50 falling a modest 0.8%. The FTSE 100 is the session's laggard given its higher exposure to China HK. Gold outlook brightens as politics turn risk sentiment sour. As political tensions between the U.S. and China increase, gold is picking up a safe haven bid ahead of the long weekend and may look to press higher. This week, the U.S. continued to discuss barring Chinese companies from listing on U.S. stock markets, cutting off an important flow of capital, while U.S. President Donald Trump continued to warn China that the U.S. would impose additional tariffs on the country in response to perceived Chinese inactions over the COVID-19 virus outbreak. The Hong Kong stock market fell sharply overnight after China proposed a new security law in Hong Kong that would override parts of Hong Kong law. There are fears that China will now overrule elected Hong Kong officials and impose their new security laws. The Hang Seng finished the session 5.6% lower, its largest fall since 2015. Canadian dollar forecast. The unrelenting sideways shuffle. Levels for CAD, JPY, and USD CAD. The Canadian dollar has proven stable in recent weeks following a dramatic turn lower in March, guided to the downside by energy markets amid the fallout from the coronavirus pandemic. But the rebound in WTI crude oil prices, the North American benchmark, as well as Canada's Western Canadian select oil prices, has given energy-sensitive currencies like the loonie an opportunity to stem losses. And so, whereas the stability afforded to the Canadian dollar up until this point in time has hinged on a rebound in energy markets, may hold that the Canadian dollar has now turned its attention to broader risk appetite. EUR GBP forecast. EUR versus GBP price. Bulls rejected at resistance. What's next? On Friday, EUR GBP surged to an over 6-week high at 0.8940, then closed the weekly candlestick in the green with a 2.3% gain. Alongside that, the Relative Strength Index, RSI, rose from 56 to 64, highlighting that bulls were in charge. Looking at the daily chart, last week, EUR GBP broke above the neckline of the double bottom pattern located at 0.8863 and generated a bullish signal. Additionally, the price closed above the 50-day moving average, highlighting the bullish outlook of the market. Yesterday, the pair rallied to a near 2-month high at 0.9000. However, the price reversed before testing the high end of the current trading zone, 0.8912, 0.9015, reflecting a weaker bullish momentum.